Hi guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. Today we're going to talk about what I feel is the best Fidelity Index fund for investors. And the index fund we're going to talk about today is FSKAX, the Fidelity Total Market Index Fund. Now, why do I like this fund? Well, as you guys know, if you've watched my channel, I say the only thing we control investing is the fees that we pay. And this has a very low fee, you guys. It has an expense ratio of 0.015%. In other words, you're paying $1.50 on every $10,000 you invest per year, or 15 cents on 1,000. It's almost free. Now, full disclosure, Fidelity does actually have a zero fund that is sort of the equivalent to this, but that fund's only been around for 3 years. Not quite 3 years, actually. But it'll be 3 years this year. And for me, that's not a long enough track record. This fund's been around since 2011, so over a decade of doing what it does. This will be categorized as a large blend fund in the Morningstar style box fund, but it is a total stock market fund. It follows the Dow Jones US Total Stock Market Index. So it has large companies, it has some medium companies, and it has some small cap companies as well. In fact, this fund has over 3,600 holdings, you guys. So by buying one fund, you're getting access and ownership in over 3,600 companies. Let's talk a little bit more about the expenses. We talked about the expense ratio being very inexpensive, and I like that. But not only that, a lot of brokerage companies, when you want to open an IRA, a Roth IRA, for example, will have a minimum that you have to put in that fund to open the fund. My favorite Vanguard, for example, FSKAX, has a $3,000 minimum buy-in. Fidelity in this fund has zero. You could invest $1. And not only if in a brokerage account, but also in an IRA. If you wanted to open a Roth IRA and you started with $5, that would be allowed. So that's something that not a lot of companies actually offer. Okay, now let's take a look at how this fund has done over the last 10 years, okay? So first of all, we're looking at the Fidelity Total Market Index. As I said, that follows the Dow Jones US Total Stock Market Index. This fund in the 1 year has increased 43.95%, you guys, which is pretty much insane. Now, we did have the recovery from the pandemic, so our returns have been much higher than normal. But the 3 year, 17.96%, you guys, almost 18% over 3 years. That's incredible. The 5 year, 17.33%. And at 10 years, it's even 14.18%, you guys. That's incredible. Now, we have been on a 10+ year bull market, and pretty much stocks have gone up a lot. We know that. Doesn't mean it's going to happen going forward. We don't know what's going to happen going forward. It's anybody's guess, right? But the track record looks pretty good. Let's say that back in 2011, it was a brand new fund and I invested $10,000. And all I did was leave that money there. I didn't add to it, but I allowed all the dividends to reinvest. I just left it alone. You guys, right now it would be worth $37,500. It's more than tripled. In fact, it's almost quadrupled in 10 years. Now, as I said, it's been a 10-year bull market. But let's take a look at how each year panned out, because this is kind of interesting. So if we go back to 2011, it only made 1.02%. 2012, pretty good year, 16.36%. 2013, great year, you guys, 33.42%. 2014, a good year, but average, 12.47. 2015, this is a little different, you guys, 0.47%. So they just less than 0.5% that year. 2016, a pretty good average year, 12.68%. 2017, another good year, 21.18%. Oh, let's look at 2018. That was the only year this fund actually went negative, you guys, and it lost 5.28%. 2019, 30.92%. Holy cow. 2020, 20.78%. And so far this year, in 2021, it's at 12.41%. So you see that it's not a linear progression, right? There's ups and downs in there. In fact, one year it actually lost money overall. But over the long term, it's gone up over threefold, almost three and a half fold for sure, you guys, right? So let's take a look at the top 10 holdings. Now, these top 10 companies make up 21.41% of the total portfolio. These are companies everybody knows, you guys. Apple, Microsoft, Amazon, Facebook, Alphabet A, Alphabet C. Those are both Google companies, right? They have A shares and C shares. Tesla, Berkshire Hathaway, JP Morgan Chase, Johnson & Johnson. These are all companies that, unless you've lived under a rock for a decade, you know these company names, right? These are big companies that are pretty much the leaders in whatever their industry is, right? And because this is a market-based fund, right, the bigger the company, it's going to get a bigger share of the market, right? So as the companies get smaller, there's smaller and smaller portions. But as I said, this has large companies, it has some medium companies, and it also has some small companies, which is what I really like about it. A lot of people will tell you that a S&P 500 index is the best. And if that's what you have the option in your 401k or a workplace plan, you guys, it's a great choice. It's a great choice outside of that. But I prefer being able to get the total market. To me, having those small caps and mid caps, which are more volatile and more risky, but with more risk usually means more reward. Now, it does mean that mine's going to go up and down a little bit more than an S&P 500 index, and that's fine. Because I know over the long run, American companies usually do pretty darn good. And I like the exposure to having small and medium caps all within one fund. So you guys, FSKAX, super low expense ratio, no minimums to buy in, a super easy way to get everything you need in the total US stock market by buying one index fund. You don't have to think about it. You just open the fund, put money in, and let it go. And every year you add to it, and over time it's going to grow, you guys. It's a simple way for a beginner to get into the stock market, or even a person who's been investing for a while who just doesn't want to do the work. It's an easy, lazy way to invest that is effective. All right, you guys, I hope you got something out of this. If you did, do me a favor, drop me that like. It really helps get my videos out to more people. The YouTube algorithm, the mighty algorithm, likes the likes. It tells people, hey, this is a video you should watch. If you're not already subscribed, you know the deal. Hit the red button, ring the bell. You'll get notified each time I make a video. I try to make at least once a week. You guys do me a favor, in the comments, let me know, have you used this fund? Do you use any Fidelity funds or total stock market indexes? And if not, why? All right, we'll see you. Thanks a lot.